For this mock exercise, we're going to take a look at cost allocation for joint products. And we're going to take a look at Wood Spirits Company as a prime example. So let's look at the question. So Wood Spirit produces two products, turpentine and methanol, and by a joint process. So they have a joint process, and at the end of that joint process, they created two products, turpentine and methanol. Joint costs amounts to $144,000 per batch of output. Now, each batch totals 40 liters, 25% methanol, and 75% turpentine. Both products are processed further without any gains or loss in volume. And separable processing costs are methanol's 90 cents per liter and turpentine 60 cents per liter. Methanol sells for $6.30 and turpentine sells for $4.30. Now, when I do these cost allocation, what would be really helpful is perhaps we need to draw the process, the joint process. So let's do that. So we're told that this was the joint process and cost, and we know that the cost is $144,000, sorry. Okay, so that's this one here. Now, we're going to split that between 25% and 75%. And this one is methanol, right? So let's just label it as M and turpentine as T. Now, how many liters? We've got 40,000 liters. So let me just do that in. Okay, now 25% of 40 is 10,000 liters. And 70% of 40 is 30,000 liters. Now, we're told that we need to process, right, further. So we call these separable costs. So processing, and it's going to cost us 90 cents per liter. So let me just make that. I'm going to put a box beside that. Put it in the box, I mean. And then this one is we need to process this further at 60 cents per liter. Okay, so we're told, if you go back to the question, it says that separable costs are methanol 90 cents per liter and 60 cents per liter. Now, we need to know the sales price. Sales price for methanol is $6.30 per liter times 10,000 liters, right? And the processing of turpentine is $4.20 per liter times 30,000 liters. Okay? So it's probably not a bad idea when you do one of these joint costs to draw out the joint cost, how much from the joint cost, how much do we split? How do we split the joint cost? How much goes to methanol and how much goes to turpentine? And then each of these there will be separate processing costs for each one of these before it actually gets sold. Now, let's look at the required. The required says how much joint cost, so how much of the 144,000 should be allocated to turpentine and methanol, assuming that we're going to use what they call the physical measure method. And the second part of the question says, how much do we take the 144,000, assuming we're going to use the NRV method. So NRV, net realizable value method. So the key is that we need to be able to determine how much of this 144 gets split out. Because that's the point, right? Because what we want, the objective is we want to be able to understand the profitability and the cost structure of both products separately. And this is a joint cost that we need to be able to allocate separately. Now, it says here, prepare an income statement for item number 3 using either physical method or NRV method, assuming there were no beginning and ending inventory. And for item number 4, it's asking us a different scenario, what if scenario. We're going to come back to item number 4 once we've done 1, 2, and 3. Now, if you remember back, if you recall in your lecture, we saw that to allocate a joint cost, there are essentially 2 main methods. One is called the physical measure, which means that we're going to allocate that 144,000 based on some sort of tangible attribute such as number of liters, pounds, number of units, whatever is the actual metric to track the physical aspect of the actual goods that are produced from the joint product production. The other one is called the market-based method. And the market-based method essentially allocates that joint cost, 144,000, based on 3 different types of market-driven data. The first one is the sales value at the split-off point. The second one is the net realizable value. And the third one is the constant gross margin percentage. Now, we're going to take a look at these 3, but actually in this question, these 2 are the same. Why is it the same? Because if you look at the chart that we just did, the sales value at the split-off point is essentially this value. Because we split, and the fact is that when we split it, we need to process it further. So that's the sales value of the split-off point. And this is also equal to the NRV of each of the individual products, the methanol and turpentine. So in this particular example, both the sales value, the split-off point, and net realizable value are actually the same. But we're going to actually take a look at another question that in another video that perhaps will highlight the difference between these 2, the sales value, split-off point, and the net realizable value. Now, in terms of the question, why don't we start answering the question, and then maybe we can talk about the theory a little bit as well. So in the first method, the physical measure is a way to allocate the joint cost. How do we do that? Well, we know that methanol has 10,000 liters and turpentine has 30,000 liters. Now, what's the relative weighting of each one? So we know it's 10 divided by 40, which is 25%. And this one is 30 divided by 40 is 75%. So we're going to take the joint cost of 144. We're going to multiply 25% for methanol and 75% for turpentine. The sum of these two is 144. So it's that easy. So we're going to use the relative physical measure to allocate the joint cost. Okay? So that was the first method. The second method is the NRV method. So let me do that here. Let me highlight that this is the next one. Okay, so the second method is, first we want to know the final sales value for M and T. So for M, we know that we're going to get $6.30 times 10,000 liters. And for T, it's $4.20 times 30,000 liters. So this one is 63,000. This is 126,000. Together is 189. Then we're going to deduct separable cost. And we're going to deduct the separable cost. And what would the separable cost? Well, we require an extra 90 cents per liter for processing M to get to that final stage, final sales product. And similarly, how much is this one? This is 60 cents per liter of processing. Okay, so we're going to take a look at that. And again, M and T. So we know that 10,000 times 90 cents and 30,000 times 60 cents. So that's 9,000 and that's 18,000. We're going to subtract it to determine what is the net realizable value at the split off point. And that is 54,108. Now we're going to use the relative values of these two to allocate the joint cost. So the relative weighting is going to be 54 divided by 54 plus 108. That gives us 33%. And this is 108 divided by 54 plus 108. That will give us 77%. Now I'm rounding, obviously, I'm rounding, right? Because that should be 1/3, 2/3. And then joint cost will be the 144 we're going to allocate based on these relative fair values. And of course, 33% of 144 is 48,000. And this is 96,000. So these are the two numbers that I'm going to focus on. So I just answered part 1 and I answered part 2, and it says do the income statement. So we're going to do the income statement based on these. So I've got M and T and total. Okay, the first one is revenue. Let's do the physical measure first. So let me write that down in red. It's the first method. So revenue is going to be the same, right? It's going to be this number, 63,000 and 126,000, we just calculated in part 2. Now, cost of goods sold, I'll short form that as COG. We know that the cost of goods sold, the separable cost, was 36 and the 108. So joint cost and the separable cost. And the separable cost we calculated was 9,000 and 18,000. So let's write that down. Total is 45, 126, and 171. So gross margin, so GM, is 63 less 45, gives me 18,000. And this one is 0. Now, if we use the NRV method, what would the income statement look like? Well, revenue would be the same. It wouldn't matter, right? Cost of goods sold. So the joint cost, we already said, is going to be 48,000 and 96,000 in part 2. Now we're going to add the separable costs. And that's the same, right? All we're doing here is, the concept in this mock exercise is all about trying to determine how do we allocate the joint cost. And here you see that that's 27,000. Total cost is 57, 114. And gross margin is 6,000, 12,000, and 18,000. You could see there's a couple of things I want to highlight from a theoretical aspect. And you'll see that in other cases, the total income is going to be the same, right? These are going to be the same. We know they're the same. But what's different is the fact that if I'm going to evaluate methanol and turpentine as two different product lines, I'm trying to determine some sort of profitability measurement, some sort of ability to measure how we price things. It's important for us to be able to allocate $144,000 appropriately. And you can see that if we use physical measure, it looks like turpentine doesn't make any money. But yet, if we use the NRV method, it makes more than the methanol. So it's important for us to decide which method to allocate joint costs, because you can see in this illustration, it may create different decision depending on which method we decide to use. Now, let's look at part 3 to the question. So let me come back to part 3. Or part 4, sorry, part 4 of the question. So part 4 of the question says, the company has discovered that an additional process by which the methanol can be made into laboratory ethanol. So we want to be able to process this further, and I'm going to use purple in this case. So now we're going to take M and we're going to process it up further to E ethanol. Now the selling price is $18 per liter. So let me write that down. SP selling price is $18 per liter. And additional processing cost would increase by $2.70. So we've got a processing $2.70. So I'm going to put a little box beside that. So to process M further to create ethanol, there's processing cost of $2.70 in addition to the 90 cents. So in addition to the 90 cents, there's an additional $2.70. Now the company would have to pay excise tax of 20% on the selling price of the product. So we also have to tack in an additional cost of 20% of the selling price as excise tax. So I'm going to write this down, less 20% taxes. Now, it does say that the company, so assuming no other changes in cost, what is the joint cost applicable to ethanol using the NRV method should the company produce ethanol? Show your calculation. So now it takes a very different dynamic in part 4. It's saying that we can process methanol further to ethanol, but there's additional processing fee. There's also additional taxes that need to be paid. And we're going to get a little bit more, $18 per liter. What do you think we should do? So let's take a look. So for part 4, now we're going to compare what is the actual final product between ethanol and turpentine. Because turpentine still hasn't changed. So let's look at the, again, we're going to use the NRV method. So the final sales value for ethanol is going to be 10,000. It's still 10,000 liter. And in this case, we haven't assumed we lost, right, the number of liters through the further processing to the actual ethanol. But some question, again, we're going to take a look at a question on our next, the next video after this, which shows what if there was a loss in the actual production if we process it further. So I'll show you that. And this one, the sales price is $18. So this one's $180,000. And for turpentine, it's still the same, right? It's 30,000 times $4.20. And that gives us 126. Now we're going to subtract the separable costs. The first one is the ethanol And we know that ethanol is 10,000 times the sum of the separable cost of $2.70 plus the 90 cents. Okay, so 270 plus 90. By the way, this is $3.60. That's the sum of that. Okay, plus, remember 20% of excise tax of the 180? And that gives us 72,000. Because that's the excise tax. And for turpentine, we've got the 30,000 times the 60 cents. It was still the same processing cost, right? And that would give us 18,000. So the sum of these two is 90,000. So the NRV at split off is going to be 108, and this is 18,000. So this is 108 as well. And of course, that means it's a 50-50 split, right? So the weighting is 50%. So we're going to take the joint cost of 144 times 50%. Gives me 72 and 72. Now I want to do, so that's how much I need to split. Now I want to analyze whether this makes sense, whether should we process the methanol to ethanol further. Let's take a look at how we're going to justify that. So we're going to use the incremental approach this time. We could have certainly done the income statement again, and we could have done the same exercise that we did and created income statement for both, in this case, ethanol and turpentine. And so we could have done the same analysis, but this time let's take a look at another way of doing it called the incremental approach. So how does it work? Well, what is the incremental revenue? So we know that turpentine, whether we process it further, whether the decision to process methanol to ethanol, turpentine is still going to be the same. So it becomes irrelevant in the decision-making process. What's relevant is we're going to look at the two scenarios. What if we process it further? What's the revenue? The revenue is going to be $18. Versus if we didn't process it further, the revenue was $6.30. Okay, so $6.30. So the change times 10,000 units. So there's going to be 117,000 incremental revenue. What are my incremental costs? Well, the incremental cost is just the additional processing of $2.70 plus the excise tax, right? Which is 20% times $18 times 10,000 units. So the incremental income from processing further is the difference between these two. Now, you're probably wondering, why am I not including the processing cost of 90 cents? Well, whether we stay at the methanol or the ethanol, this is not relevant in our decision, because that is not relevant because it doesn't matter. We need to process it at this stage before we can make a decision whether we should process it further. So that cost is not relevant in our decision whether we should proceed further from methanol or ethanol. And another question that you may ask is, what about the 144, the joint cost? Again, the same idea. The fact that the decision is whether to process it further, this is already a sunk cost. That's not relevant in our decision. So in looking at whether we should process it further or not, these separable costs that would have been incurred in producing methanol, irrespective of whether we decided to process it further to ethanol, is not relevant. These two are not relevant. Now here's the proof. I wanted just to prove that this is actually the right incremental profit. In other words, it makes sense to process it further to methanol, to ethanol. And here's how we're going to prove it. So my total revenue, so let's do an income statement again. And this time we're going to have ethanol and turpentine. So we're going to do it the long way. Revenue, we know that ethanol revenue is going to be, let me see, we did that already, right? Let me find my notes. We've got 180 and 126, 306. Now, what about cost of goods sold? The separable costs. We know these are the two, the 90,000, so 72. And the 18. And the joint cost. The joint cost was going to be 50-50 split. Total cost of goods sold is going to be 144, and the profit is going to be $36. And this one is 72 and 18 gives us 90. And this gives us 90 less is 36,000. This gives us 72,000. Now, that's the new profit. What was the old? What was the old profit? Assuming that we did not process it further. It was 18,000, wasn't it? That was 18,000 here. So that's 18. So the difference is this 54,000. Which is what we said was going to be the difference. So you can see that the incremental method is much more powerful, much more easier, much more faster to determine whether we should process it further. Okay, thank you.